Thursday, August 6, 2020, Maneco 64, home of alternative economics and contrarian views. So the 21st century gold bull market is far from over. I've spoken about this before. I've done 2 videos with the same title. There's part 1. Part 2 more recently was back on June 28th, 2020. And I spoke about how gold needed to make a new all-time high to confirm the third leg of the 21st century bull market. I spoke about how silver needed to break through 21 to confirm the correction of its 21st century bull market. And I also noted that the bull market in silver, the 21st century bull market, actually started in 1991 in the 20th century. That was the low after the 1980 high at 50 was in 1991. After 1991, we never went below that level. Even in 2002 and 3, when silver made a major bottom, the major bottom for this current bull market was in 1991. I highly recommend you go through part 2. You might want to go through part 1. In part 2, I calculate where I think gold and silver could go in terms of fiat dollar prices by looking back at the 1970s bull market and extrapolating the moves in percentage terms, in time terms, cycle, and everything else. So as I said back in June, we needed to break through 1920. At the time, we were below 1800. Silver was below 20. So it's all been confirmed now. We've seen how silver has really accelerated on the break of 21. It's almost gone up non-stop. We've seen how gold, after it broke through 1920, quickly traded up to 2000. So we are in the early phases of this phase 3, in my opinion, and it is a 21st century bull market. So I highly recommend you watch that if you want to know my price targets. They're similar to a few people. I would say my silver price target is very similar to Ron Rosen's price target. If you want to read a little more about Ron Rosen, I'm going to put a link below in the description, 321gold.com. He posts, Bob Moriarty posts some of the work by Ron Rosen, and I saw that his target in silver is very similar to mine. So you can look at that as well. He worked it out in a similar fashion than I did. So before I look at the markets this morning, just want to talk about precious metals price suppression. So as most of you know, I worked in the markets in the city of London for over 20 years. I started out in Switzerland in the late 80s. So I've been following markets for over 3 decades. And the first time I purchased gold coins was in 2002. So I didn't wake up to the fact that the monetary system was screwed up until after 2002, when my wife and I decided to buy some Krugerrands because we thought it would be a good alternative. We just had the dot-com bubble bursting. That bubble burst in 2000, 2001, and we thought, let's buy some Krugerrands. And after that, I started looking into gold, and I realized that it was a really important part of the monetary system. Going back thousands of years, it's the ultimate store of value. It has been for thousands of years, and silver as well, of course. So I realized that going back and learning about the monetary system was impossible also not to include silver. And so by 2002, I'd been watching a screen for over a decade as a futures and options broker in the city of London. I knew how markets traded They were quite random. Yes, there were cycles, but I started realizing there was something funny and fishy about the gold futures market. For example, one of the things I realized before the official open on COMEX at 8:30 a.m. or 8:20 a.m. New York or 1:20 p.m. London, a lot of the times gold had been having a very good morning, or even silver in London, and then all of a sudden it would just sell off into the open of COMEX. It seemed to happen almost 9 out of 10 times or so. What else would happen in the gold market that made me suspicious right off the bat? Well, for example, there's a PM fixing in London. After 3 p.m., it can be fixed at any time after that time. And I remembered after the fixing came out and the physical market in London shut after the fixing after 3 p.m., that the futures on COMEX, the price of gold, would drop quite significantly, especially if it had managed to rally prior to the PM fixing. So there were all these things that happen always at the same time. And trading the bond markets, because that's what I used to do, trade mostly bond markets. I didn't see that in the bond markets. Bond markets didn't have like these kind of moves that you could look at your watch and say, oh, this is going to happen. So I started looking into it. So I've been looking into the gold and silver suppression scheme since around 2002, 2003. I follow Bill Murphy of GATA. I subscribed to GATA for many years. I know about Ted Butler. I know about Andrew Maguire. I knew about Ferdinand Lips, who wrote a book about the manipulation of gold. Yeah, I follow the CFTC case about silver, where they had a case for 5 years and dropped it. So I've known all along about this, and I've known that the central banks and the bullion banks are involved in this. Bullion banks are the agents of the central banks. And someone might say, well, if they being suppressing or controlling the price, how come it keeps going up? Well, I think it's more nuanced than that. What they've succeeded in doing is, yeah, they have suppressed the price, in my opinion. And all that's done, though, it's allowed the credit bubble in this fiat currency system to keep going on longer than it should have in a free market. But all it's done, it's decreased the supply of the metals out there. And like with any other government price control scheme, eventually it leads to shortages, it leads to higher prices. There's the example of the early 70s when Richard Nixon put price controls on all kinds of things and prices actually went up. There were shortages. So this is what they've done to gold and silver. The other thing as well is that they've kept suppressing it for so long, especially silver, that once this scheme unravels, and I think we are in the early stages of it unraveling, we're going to see unimaginable prices that the average person or even the people who follow markets but don't know about gold and silver, don't know about the history of money, they will be totally shocked. But you and I won't be shocked, especially if you've been following me for the last 5 years, because I've been talking about this all these years. Just because I haven't talked recently about the suppression doesn't mean to say that it's not in my mind. So what it will mean, this unraveling of the suppression, it will mean the end of this credit bubble. It will mean the rebalancing of values of all different assets. Yes, the Dow might stay at 30,000, NASDAQ at even 15,000, S&P at 4,000. But with where gold and silver are going, it will reveal the real value in real terms of all these other assets. It will rebalance things. It will be, of course, the reset. Yeah, so the same thing happened in the 70s and up until 1980, the reset. The central banks did the same thing through the London gold pool. That was overtly, they controlled and suppressed the price of gold through the London gold pool. But once that scheme unraveled at around 1968, when the French didn't want to play ball anymore in this London gold pool and actually wanted the physical gold, it all unraveled. And they couldn't keep the price at 35 anymore. And eventually Nixon had to close the gold window because they kept that level of 35. But they were losing a lot of gold because people knew gold was worth a lot more. So how many people in 1971, 72 would have thought that gold would top almost at $1,000, just under 900 in 1980? It would have been unimaginable. The same thing for silver, which used to trade in with a $1 or $2 handle. Who would have thought it would have gone to 50? So that's what I'm trying to tell you here. Yes, it's been frustrating, the gold suppression, the manipulation, but it can't go on forever. And I think we're in the beginning stages of the unraveling. I'm not going to go through all the details of all the deliveries on COMEX, how much silver JP Morgan's holding. That's the minutia. I'm looking more at the bigger picture. If you want that, there's a lot of other people out there who follow it almost on an hourly basis. So there you go. Yeah, the 21st century gold bull market is just beginning. Well, the third leg of it is just beginning. So it's far from over. So let's quickly look at the markets this morning. It's 8 a.m. London, actually. So we got spot gold at 2,051. That's up $12, 0.2%. We've got silver up 73 cents, 2.7% at 27.70. The high's been 27.88. So silver just keeps going. What will really ignite silver even more is when it breaks 50. I think it's only a matter of time until it breaks 50. Not sure when it's going to be. It's not going to be a straight line, of course. What about the other markets? Well, the Dow futures up 48.18%. S&P is unchanged. S&P future, NASDAQ 100 future is down 20 points. So fairly quiet, subdued markets. Sterling is up a little bit, up 0.4% at 131.65. We've had the Bank of England make its announcements this morning at 7 a.m. Not sure why they do it so early now, but used to be made at 12 o'clock. They kept rates at 0.1 and they kept the QE amount unchanged, and the vote to keep rates unchanged was 9-0. So it was as expected. Does this mean it's over for the Bank of England accommodation? No, they don't do it all at once. They give themselves a bit of time, the Bank of England. They don't want to show desperation. So the euro this morning, 118.77. It's up 0.13%. The dollar's down 0.1 versus the yen at 105.48. Yeah, and I've noticed the dollar's been dropping quite a bit against the yuan. We're now at 6.94. We were stuck around 7 for a while there. So yeah, the yuan is strengthening quite a bit. Crude oil, WTI is unchanged at $42 239. To finish off with the bond market, the 10-year yield is at 0.543, unchanged. 2-year note is at 0.117, unchanged as well. So there you go. Yeah, the 21st century gold bull market and the silver bull market, for that matter, is far from over. You just need to hold on to the bull, and as Jesse Livermore said many years ago, be right and sit tight. This is like a, yeah, it's like unprecedented in my opinion, and it's not surprising because we've had unprecedented fiat currency inflation ever since Nixon closed that gold window in that fateful Sunday evening, August 15th, 1971. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.